Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is March 27th, 2025, and we're diving into the full year 2024 earnings report of Perspective Therapeutics, a pioneering radiopharmaceutical company. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Perspective Therapeutics is making significant strides in the field of cancer treatment with their innovative radiopharmaceutical technology. I'm excited to discuss their latest financial results and business updates.
Revenue and profitability overview. Let's start with the financials. Perspective Therapeutics reported a net loss of $79.3 million for the year 2024, translating to a loss per share of 123 cents. John, what are the key factors contributing to this loss?
The significant net loss is primarily due to high operating expenses, which totaled $92.3 million. This includes a substantial increase in research and development expenses, which nearly doubled from the previous year as the company invests heavily in advancing its clinical programs. Additionally, there was a one-time goodwill impairment charge of $24.1 million.
And what about their revenue streams?
Perspective Therapeutics generated $1.5 million in grant revenue, which is consistent with the previous year. This revenue is primarily derived from collaborations with the National Institutes of Health.
Clinical and strategic initiatives. Moving on to their strategic initiatives, Perspective Therapeutics is on track for multiple clinical updates through mid-2026. Can you elaborate on their clinical progress and strategic expansions?
Absolutely. The company is making significant progress in its clinical trials, particularly with the VMT-OFF-NET program, which has enrolled 30 patients in its Phase 1/2A trial. They're also expanding their manufacturing capabilities with new facilities in New Jersey, Texas, Illinois, and California to support both clinical and future commercial operations.
How is their financial position supporting these initiatives?
They have a strong cash position with $227 million in cash, cash equivalents, and short-term investments, which is expected to fund their planned clinical milestones and operational investments into late 2026.
EPS forecast and analyst expectations. John, analysts had forecasted an EPS of 26 cents, but the actual EPS came in at $1.23. What does this significant miss indicate?
This miss indicates that the company's expenses, particularly in R&D and the goodwill impairment, were much higher than anticipated. With only one analyst providing a forecast, the expectations might not have fully captured the scale of the company's investments and strategic shifts.
Does this affect the company's outlook?
While the EPS miss is notable, the company's strategic focus on expanding its clinical pipeline and manufacturing capabilities suggests a long-term growth trajectory. Investors should consider the potential for future revenue generation from these initiatives.
Operational efficiencies and future outlook. Let's discuss their operational efficiencies and future outlook. Perspective Therapeutics reported R&D expenses of $41.6 million and G&A expenses of $26.6 million. How do these figures align with their future prospects?
The increase in R&D expenses reflects their commitment to advancing their clinical programs, which is crucial for their long-term success. The rise in G&A expenses is primarily due to increased personnel costs and professional fees, which are necessary for supporting their expanding operations. Despite the goodwill impairment, the company's focus on innovation and expansion positions them well for future growth.
What can investors expect moving forward?
Investors can expect continued progress in their clinical trials and potential new product launches. The company's strategic investments in manufacturing and clinical development are likely to drive future revenue growth and enhance shareholder value.
Key takeaways. In summary, Perspective Therapeutics reported a challenging year with a net loss of $79.3 million, but they maintain a strong cash position of $227 million to support their ambitious clinical and operational plans. Despite the significant EPS miss, their clinical progress remains on track. John, any final thoughts?
Perspective Therapeutics is in a transformative phase, focusing on long-term growth through strategic investments in their clinical pipeline and manufacturing capabilities. While the financials reflect current challenges, the company's innovative approach and strong cash reserves provide a solid foundation for future success.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Perspective Therapeutics' performance in the comments below.